Habit number 3, how to always have enough money. The cash-eating moose. Ever feel like your business is an out-of-control cash-eating cow? Not sure what's eating away at your hard-earned money as it's never around when you need it, especially at tax time? Hey, maybe it's not a cash-eating cow, maybe it's the elephant, or maybe it's that moose that's on the table. Whatever it is, it must go far, far away from you, your family, and your business. You need to break the vicious cycle of money. Now, you work, you grind, and through as a business owner, you have become tougher than a boiled owl. When you first started consulting or your small business with nothing more than an idea, your unique talents, and a few resources you had, the hustle was fun. Maybe it was even exhilarating. You were living the dream, but over time, that dream can become a nightmare if you can sleep at all. When I left the corporate world to enter the financial industry, I loved it. I felt like the underdog who's grinding day after day, trying to make the world a better place. And everyone loves an underdog, right? Well, maybe in the movies. I love Rocky. Rocky's my favorite movie. But in real life, the grind was putting stress on my marriage. I wasn't fully present as I was always thinking about all the things I needed to get done. I lost friendships, and I wasn't making enough money to pay the bills. It was pretty tough to give financial advice when you're going into the red every month and suffering from burnout. I know from experience that cash-eating moose can get pretty friggin' hungry, leaving you with empty bank accounts, mounting credit card debt, loans, and a growing list of must-pay expenses. It eats up your time and energy too. You find yourself waking up early and going to bed late, your mind burdened with all the work you need to get done, the ever-increasing stress and anxiety taking a toll on your well-being. Why am I not doing better? How will I manage these bills? I'm afraid of losing what I have. These are thoughts that often plague us. We tell ourselves we just need to work harder. We need to invest even more money into our business. We just need to grow and get bigger. Then we'll make a profit. The business you started doesn't free you. It drains you. Does this sound familiar? Welcome to Parkinson's Law, aka the vicious cycle of money. The more money you make, the more you will spend. And the more money you spend, the more you need to make. It leaves the majority stressed out and burnt out. If you've been there, you understand what I mean. Traditional business accounting methods can be very confusing. Have you ever read your profit loss statement that your accountant gave you and understood it? It doesn't help you with your financial decisions or affect the way that you spend and save. It does nothing to help nurture the good spending and saving habits that you need, leading many small business owners to failure. Many people turn to budgets, tracking tools, and other gizmos and gadgets, trying to discover where their money goes at the end of the month with little success. Budgets are like diets. They are limiting, restrictive, ineffective, and simply don't work. That's the truth about diets. Diets don't work, but some do. I'm going to introduce you to a cash flow plan that changed my life. I only wish I was introduced to it earlier. It will stop the feast and famine cycle of your business and life. It will remove that cash-eating moose and still allow you to buy the stuff that you want, guilt-free. When Wendy Brookhouse introduced her one-number solution to me, I was skeptical. It seemed too simple to work. The engineer in me liked spreadsheets, budgets, and rules. I even had a silly rule of not to spend more than $10 on a meal when dining alone. I often broke this rule or resorted to going to several different fast food joints to stay within that budget. I had a daily habit of going to McDonald's for a sausage and egg McMuffin and a large coffee every morning. Hey, it was under $10 after all. Armed with this new cash flow plan, I stopped going to McDonald's every morning. Not only did I save a bunch of money at the end of the month, but I also lost a bunch of weight too. Don't you love win-wins? So, as an engineer would, I took Wendy's one-number solution and made it even more efficient, effective, and easier to follow. Clients using this cash flow plan report feeling calmer and less stressed about money. They can focus on what's truly important to them instead of trying to constantly balance the books. Cash flow is simply how you use your money. This comprises of the money you have available to use and the money spent on expenses. A cash flow plan is different than a budget. A budget might be a good place to start, but they're like most diets. They are restrictive and simply don't work. Budgets will restrict the amount that you can spend on a line-by-line basis. This is not the case with the cash flow plan. How you use your funds in your spending account is completely up to you. The one number solution works with your thought process and is habit forming. It helps your Yoda brain control your monkey and guide your elephant brain. This plan lets you pay down unwanted debt, enjoy your present life, save for your future self, and safeguard your family from potential risks. It offers a singular focus while the rest of your financial life is on autopilot. The purpose of a one number cash flow plan is to find funds that can be directed to your goals and your priorities. By uncovering efficiency in your cash management and plugging the leaks in your spending habits, you'll discover money that can be allocated to what truly matters in life. Cash flow planning provides options for your money to be used for what you want. Maybe that's a legacy to enhance, or maybe even to enhance your current lifestyle. For the many without a cash flow plan, these funds usually victim to frivolous spending or are eaten up by that cash-eating moose. But not you, not anymore. With a cash flow plan in place, you control your finances rather than being controlled by them. A very simple and effective way to manage cash is to set up 3 accounts. The first is the main account. This is where your income comes in and your expenses go out. The second is a spending account for your emotional spends. This is also referred to as your one number. And then your third account is your future self account. This is for future savings and investments. The main account, let's dive into this. The main account, this can be a regular checking account or a product like the Manulife One, where your income comes in. So all your income comes into this, and your monthly expenses, your spending account, and your future accounts are paid from. If you need more information on the Manulife One product, there's going to be some talk about that on the Smith maneuver in section 5 for habit 5. We also have some more information on our website in the resources of designanevenbetterfuture.com. Look, most business owners live in and out of their checking account. Stop being like most business owners. Ideally, you don't want to have much money left in your main account at the end of each month. Why do you think this is? It's simply because if you have a lot of money left over in your checking or main account, you will spend it. If you find yourself that you have extra funds in your main account, consider the rule of thirds, where you allocate 1/3 to your future self account, 1/3 to debt repayment, and 1/3 to your spending account. This could include an impromptu family vacation or spa getaway with your house. To elevate your financial game, consider investing 1% of your excess funds right into your future self account and use the interest and compound interest that you're growing to cover your expenses. This is how wealthy individuals think. They invest first, use what's left over, and continually invest. Spending from your spending account and from the interest earned on your investments. Don't stop the compounding power of your money. This is the secret to growing wealth, is through compounding interest. Your main account will fund your spending account, so your one number, your future account, this is your investing and savings, your home expenses, including home and internet, your transportation expenses. You know, if you're having a bad day, you just don't go and fill out your vehicle with gas, so it's part of your expenses, your debt, your family and income protection, and family vacations. The second account is your spending account, also known as your one number. We highly recommend using the KOHO MasterCard to fund your spending account. This is a prepaid MasterCard, acts very differently than most credit cards. You can actually earn interest instead of paying interest, earn interest with the KOHO MasterCard. Most of your discretionary and emotional expenses will fall into the spending category. These expenses include groceries. Have you ever gone shopping hungry, right? Retail purchases such as clothing. When I used to have hair, and if I was having a bad week or a bad day, I'd go get a haircut and get a new shirt. Restaurants. What I call the double factor. I've seen people spend car payments at fast food and coffee each month. Completely crazy, and they don't even realize that it's happening. Entertainment, gifts, alcohol, and smokes. And the complete list can be found on your monthly intake form. That was in Habit 2 on page 90 of the book. Or again, it's on our resources at designanevenbetterfuture.com. It's part of the intake form that we have there. These expenses often bring happiness, enjoyment, and involve emotional impulse spending. Using the KOHO MasterCard for these expenses will act like a little angel on your shoulder, asking you if you really want what you're about to buy. Feedback from clients is similar to my experience. One client loved her double chai lattes, but felt guilty with them because she knew it was a frivolous expense. She enjoys them now. She doesn't get them as often as she used to, but when she does get them, she enjoys it guilt-free. How to manage two big emotional spends. One of the most significant expenses for most people is food and groceries. You can limit this expense by pre-ordering groceries or sticking to a predetermined list every time you shop. This expense, really, if you do it this way, can be moved to your main account instead of being linked to your spending account. Putting in a little effort in meal planning and using the same grocery list repeatedly is an excellent practice to curb impulse spending and eating out. It also reduces food waste. Another large and often crippling expense are addictions, with alcohol being the most prevalent addiction in our society. Most of us would consider ourselves socially acceptable drinkers with a couple of drinks on Friday and over the weekend, maybe a pint or two with friends on whenever the occasion arises. Look, when I chose to adopt the alcohol-free lifestyle, not only did my monthly expenses decrease, but my monthly income actually increased. This is costing you more than you think. I highly recommend trying our 30-day alcohol-free lifestyle challenge. And for more details, again, visit our resources at designanevenbetterfuture.com. With the second account, to discover your one number, it is essential to automatically fund this account on the same day you get paid. You can determine your one number by adding up all your monthly emotional expenses on the uptake form in Habit 2. If you pay yourself once a month, this is the amount you transfer to your KOHO MasterCard, right from that spreadsheet. If you pay yourself bi-weekly, multiply that number by 12 and then divide by 6 to find your one number, which you transfer to your KOHO MasterCard every payday on autopilot. As you can see, your one number is as unique as you are. Write down your one number right now. If you notice that your spending account is falling short at the end of the month, this should be a huge wake-up call. Spending less than your one number will allow you to build up cash buffers for more expenses. So this snowballs. You keep on putting the same amount in every time. If you notice that you have money left over in your spending account at the end of the year, celebrate guilt-free. Take your partner to that fancy restaurant. Put it towards a family vacation or buy that gadget that you wanted. Hey, you deserve it. Good job. Now, the third account is the future self account. This account is described in detail in Habit 4. Now that you recaptured the money that used to slip through the cracks, you should be able to fund this account with at least 30% of your paycheck on payday or the day after. Note, it is essential to separate your expenses into these 3 accounts as described. It is also critical to automate payments from your main account, including the transfer to your spending account and your future self account on payday or the day after. We recommend using the prepaid MasterCard in Canada or the Mango MasterCard in the States for your spending account. This can help you earn points, interest, and increase your credit score. This also aligns with the way your brain works and simplifies your life. No more complicated math, budgets, or wondering where your money went. Your one number is a super easy way to balance the checkbook and will quickly alert you if you're falling in the red. Now, debt. Taking a closer look at your debt that you're holding may expose some inefficiencies in the interest and payment structure. To maximize your cash flow, there could be an opportunity to lower the interest that you pay on your debt, saving you money and accelerating your debt payment. We usually recommend a divide and conquer strategy when talking about your debt. This is simply taking your smallest debt and putting your main focus on that. Just paying the minimum debts, the amounts on the other debts, taking your smallest debt, pay that off, and then whatever you have left over goes to your next debt. And it snowballs, right? Until all your debts are gone. This book and this audible program is more focused on making more money and reducing your taxes. If you need more information on how to pay off your debt faster and easier, again, visit our website, designanevenbetterfuture.com, and there should be lots of guidance there. All right, so you're incorporated. What about a cash flow plan for your incorporation? As a business owner that is incorporated, you can actually have 2 cash flow plans. One is described for your personal use. We just went over that. And then the second is for business use, which acts very similar. And once again, you set up 3 accounts. The main account, this should be your operating company where all your money comes in. And it also funds the spending account, which is a business KOHO card. This is for emotional spends and business expenses. Again, your one number. And your future self account. This is for savings and investments. And we recommend you set up a holding company to make that happen. This is described in detail in Habits 4 and 5. So, what's the point? Keep it simple, silly. No more complicated math, multiple budget lines, or trying to remember how much you spend. All you need to do is focus on one number and let your Yoda brain thrive. As a quick recap, as your one number cash flow plan, all your income goes into the main account, which is usually a checking account. The main account will fund all your living expenses such as transportation, home protection, and debt, as well as your spending and future self accounts. Your one number is the amount that you put into your spending account. Again, that's a KOHO prepaid MasterCard on the same day or day after payday. At least 30% of your paycheck should fund your future self accounts as described in Habit 4 on payday or the day after.